Palantir hits $1 billion revenue milestone, Q2 2025 earnings explained. Imagine a company so powerful that it can double its stock value in a single year, outperforming tech giants and setting new records. That's exactly what Palantir has achieved, marking a significant milestone by surpassing $1 billion in quarterly revenue for the first time and boosting its full-year guidance. This achievement has sent its shares rallying by 3% after hours. To put this into perspective, let's break down the numbers. According to the latest financial report, Palantir's earnings per share came in at 16 cents, exceeding the 14 cents expected by analysts. The company's revenue soared to $1 billion, significantly outpacing the projected $940 million. These figures are particularly impressive, given that analysts had not anticipated Palantir reaching the $1 billion revenue mark until the fourth quarter of this year. But here's where it gets controversial. CEO Alex Karp revealed ambitious plans to increase revenue while reducing the workforce. In an interview with CNBC's Morgan Brennan, Karp stated, "We're planning to grow our revenue while decreasing our number of people. This is a crazy, efficient revolution. The goal is to get 10x revenue and have 3,600 people. We have now 4,100. While Karp didn't specify whether layoffs would be part of this strategy, the idea of cutting jobs to boost profits is sure to spark debate. Do you think this approach is sustainable, or will it backfire? And Palantir's success isn't just a fluke. The company has also revised its full-year outlook, projecting revenues between $4.142 billion and $4.150 billion, a substantial increase from the previous guidance of $3.89 billion to $3.90 billion. For the third quarter, Palantir forecasts revenues ranging from $1.083 billion to $1.087 billion, well above the analyst estimate of $983 million. The company has also raised its operating income and full-year free cash flow projections. One of the key drivers behind Palantir's growth is its strong performance in the U.S. market. U.S. revenues surged 68% from the previous year to $733 million, with U.S. commercial revenues nearly doubling to $306 million. The company's U.S. government revenues also saw a significant jump of 53% to $426 million. This growth can be attributed in part to the Trump administration's push for government efficiency, which included layoffs and contract cuts. In a letter to shareholders, Karp attributed the company's rapid ascent to the convergence of advanced language models, powerful computing chips, and robust software infrastructure. During the quarter, Palantir closed 66 deals worth at least $5 million and 42 deals totaling at least $10 million, bringing the total value of its contracts to $2.27 billion, a 140% increase from the previous year. Financially, Palantir reported a net income of $326.7 million, or 13 cents per share, representing a 144% increase from the $134.1 million, or 6 cents per share, reported in the same period last year. This financial strength has propelled Palantir's market value to over $379 billion, placing it among the top 20 most valuable U.S. companies. It has even surpassed Salesforce, IBM, and Cisco to join the ranks of the top 10 U.S. tech companies by market cap. Last week, Palantir secured a massive $10 billion software and data contract with the U.S. Army, further solidifying its position in the defense sector. However, investing in Palantir comes with a hefty price tag. Currently, shares trade at 276 times forward earnings, making it one of the most expensive stocks in the top 20 U.S. companies. Tesla is the only other company in this elite group with a triple-digit ratio at 177. What do you think about Palantir's valuation and growth strategy? Is it a smart investment, or are we seeing another tech bubble? Share your thoughts in the comments below. Palantir's revenue soars. A closer look at their Q2 earnings. Imagine waking up to find that your investment in a software analytics firm has skyrocketed overnight. That's precisely what happened to shareholders of Palantir, as the company's stock surged by 8% on a Tuesday morning, following an impressive earnings report. But here's where it gets controversial. The firm's revenue growth was nothing short of explosive. And it's not just about the numbers, it's about what these numbers represent for the future of technology and governance. Let's dive in. Palantir reported a staggering 48% year-over-year increase in revenue for the 3-month period between April and June, a milestone that saw the company cross the $1 billion mark for the very first time. This isn't just a win, it's a testament to the company's growing influence and the increasing demand for its cutting-edge analytics solutions. But this is the part most people miss. The real story lies in the details. During a Monday evening earnings call, Palantir CEO Alex Karp couldn't contain his enthusiasm. As usual, I've been cautioned to be a little modest about our bombastic numbers. But honestly, there's no authentic way to be anything but have enormous pride and gratefulness about these extraordinary numbers, he exclaimed. His words echo the sentiment of a company on the rise, one that is not afraid to make bold claims and back them up with even bolder actions. The revenue breakdown is equally impressive. U.S. commercial revenue nearly doubled, soaring by 93% to reach $306 million. Meanwhile, U.S. government revenue saw a robust 53% increase, hitting $426 million. Overall, the company experienced a remarkable 68% year-over-year growth in the U.S. market. Karp's vision for the future is clear. This is a perfect time for a revolution in the United States of America, he declared. We are very, very bullish on America. We have some really crucial and important clients internationally, but this is an American revolution. Looking ahead, Palantir anticipates another $1 billion in revenue for the next quarter, projecting a full-year revenue of $4.1 billion. This forecast comes on the heels of a significant contract with the U.S. Army, valued at $10 billion over the next decade. It's a win that underscores the company's strategic importance in both commercial and governmental sectors. Palantir is just the latest in a series of tech firms showcasing strong quarterly results, riding the wave of the artificial intelligence AI boom. Microsoft's stock, for instance, saw a dramatic increase last week after reporting $75 billion in annual revenue from its cloud computing platform, Azure. This surge briefly pushed Microsoft's valuation above the $4 trillion mark, a historic milestone following NVIDIA's achievement the previous month. But the AI revolution doesn't stop at Palantir and Microsoft. Tech giants like Meta, Google, and Apple are all ramping up their capital spending, investing heavily in AI infrastructure. The question on everyone's mind is, how will this AI boom shape the future of technology and society? And what role will companies like Palantir play in this transformative era? As we stand on the brink of a technological revolution, it's clear that Palantir's success is just the beginning. The company's impressive earnings and strategic contracts are a testament to its innovative spirit and unwavering commitment to excellence. But as we celebrate these achievements, we must also consider the broader implications. How will this AI-driven growth impact privacy, security, and ethical considerations? And what can we, as consumers and stakeholders, do to ensure that this revolution benefits us all? So, what do you think? Is Palantir's success a harbinger of a brighter future, or are there hidden dangers lurking beneath the surface? Share your thoughts in the comments below, and let's spark a conversation that could shape the future of technology.